If this latest stock market crash continues to get worse, is your portfolio ready for it? Now, the S&P 500 is only down about 9% so far, but it is starting to get to that level where people are getting nervous. I want all of you to ask yourself a really important question. How would my current investing portfolio have performed during the 2008 financial crisis? Essentially, how is it going to perform the next time the stock market crashes 50%? As the old saying goes, everybody's a genius in a bull market, but given the current uncertainty in the global economy, now is a really good time to start asking yourself how your portfolio will perform if we actually are at the tail end of this bull market run since 2009. You've got to know at some point the market is going to give at least half of this back. Now, let me be perfectly clear. I don't want to see an extended recession. A lot of people get hurt when that happens. I really don't want it. But the next best outcome for us, given that a market crash is inevitable, is to make sure that we're the ones that profit from it. Our flagship VTS tactical volatility strategy harvests data from many different volatility metrics, and then we use them to divide the market up into 3 ranges. In stable market environments, we're aggressive and we hold the short volatility ETF called UVXY. When volatility is elevated and risk is rising, we rotate to our safety position of GLD gold. And during extreme times, we actually move to long volatility positions with VXZ to capitalize on the market crash. Now, the strategy officially launched with real people following it in January 2012. But because it is a 100% systematic strategy that follows those volatility metrics, it's very easy for me to drag the numbers back and show a backtest of how it would have performed during the 2008 financial crisis. So I'm going to take the live strategy that I've been trading since 2012 and use the identical methodology to show you why I'm not scared of a market crash. So this here is the S&P 500 performance from the very first day that my tactical volatility strategy got the signal to move into long volatility positions. That happened at the beginning of September 2008. And it goes right to the final day near the end of March 2009, where our strategy got the signal to exit long volatility again and start profiting from short volatility in 2009. As we can see, the S&P 500 was down about 37% in that time period. But this here is the performance of our tactical volatility strategy. Remember, this is the beginning to end of those long volatility positions. The strategy would have made a profit of about 126%. That long volatility ETF, VXE, can go up a lot when the market crashes. That plus-minus gap would have been a life-changing difference for investors. Remember, on an inflation-adjusted basis, it took the S&P 500 about 6 years to recover from the financial crisis. Just imagine the difference it would make in your 30-year investing time horizon if instead of losing half your net worth and taking years to recover, you made money and you're at all-time highs when the stock market comes out of the recession. You could accelerate your growth perhaps 5 to 10 years ahead in a very short period of time. Again, recessions are terrible and I'm definitely not excited about the next one. I don't want to see anybody get hurt. But we all need an actionable plan for our portfolio right now today that gives us confidence that we're going to be among the lucky few that not only survive the next market crash, but we actually thrive in it. Like I said, the S&P 500 is only down about 9% so far, but this is the live results of our tactical volatility strategy since we moved to safety gold a couple weeks ago. So far, we largely avoided this latest crash. Now, the strategy hasn't quite yet got those long volatility signals where the real acceleration of profit can happen. But no doubt at some point in the future it will. This isn't about predicting the next market crash. I have no idea when that's going to happen. If the market recovers and does well in the next couple years, then great. We'll just mostly use our aggressive positions. But when the time comes, you have to know how to move to safety or you're going to get steamrolled. So if you want to learn more about this style of tactical rotation investing, then claim your free trial to VTS on my website or in the description down below. Come see if the VTS community can give you the confidence to navigate the next recession. So now you can either go to the next level of education and learn how those volatility ETFs actually function based on the VIX futures, or you can check out this video where I explain how I personally use the volatility products to make over 30% a year with tactical rotation. See you in the next video.